All right. Happy Monday night. Hope you guys are doing well. A few people already on here. The chat is already running up. Appreciate you guys, as always, joining me on a Monday night. Hopefully your week has started off good. A little some green candles in the market. So people excited about that. Seems like there's actual regulations that are going to move forward. The Dems have flipped on crypto and might actually get some regulation around all this stuff here in the U.S. that fosters innovation and, rolls out some of the things that we've been hoping for a long time. So I guess that's where we'll start it tonight. Get into that, talk about, the different bills that are on the docket in the Senate and now the House. And then also SOB 121, which Biden has not issued any type of, I guess it's not really a ruling, like he can either veto or pass the bill. So sign it into effect. But the main things we're looking for. So we got FIT 21, which is on, basically it creates some legislation around the space. The underlying assets themselves would not be designated securities, irrespective of what the token was. Obviously, there's probably still going to be some security tokens. But, I think that's kind of a broad sweeping legislation that creates somebody other than the SEC that can regulate that space. And the SEC will just have jurisdiction over the contracts with those tokens that are used to raise funds. So, an ICO would still be under the SEC's purview, and you would have to have a registered securities offering in order to bring an ICO. It would need to be buttoned up. There'd have to be disclosures, all the same stuff that we, our attorneys that we work with, advise and write and do. So most of the people that are already operating in the space in that capacity are doing the right things, but we'll have actual, this is what it's supposed to be. Which will, foster people coming back here to the U.S. to launch projects without the fear of scrutiny or the SEC, showing up at the doorstep, telling them that they have an unregistered security and then suing them for God knows what and dragging it out and, costing them millions of dollars in court. They won't be able to do that. It'll just be if they did not, register the securities offering or the ICO. So that'll be good. We also have stablecoin regulation looming, as well as I forget the name of the bill, but it's anti-CBDC is basically the premise of it. So it would forbid the Federal Reserve and then also the Treasury from issuing a CBDC here in the U.S., which is good. I think a lot of people are concerned about the possible implications for that. And I've talked about that before. My views on it, I think that we're going to have visibility of transactions across the economy, irrespective of if there's a CBDC or not, just because there are going to be private stable coins that are issued by the banks. But that would be good because then that would drive demand for treasuries, especially if, these foreign bodies continue to dump the debt onto the market. That would create demand for them here domestically in the U.S., which would be, I think that's what they're going to have to do. And the last thing is the piece that mentioned in the beginning. So SOB 121, it was an act that was put in place by the SEC that forbid, banks and financial institutions from holding and using digital assets in their business. But, if Biden vetoes, then it could go back to the House, and they would need a 2/3 majority vote to overrule his veto, which is quite possible. When the bill went through first, it was 60 to 38 yays versus nays. So they would need another 6 or 7 yays if it were to come back to the House. And it seems like, there's enough traction around this at this point that people that are looking for re-election would get behind it and help kind of foster legislation around crypto. So a lot of the big players that we've seen for a long time in the space, Christian Carlo, Tom Emmer, I'm forgetting some there, but French Hill, others. They had the blockchain or crypto summit. I think it was a blockchain summit in DC on the 15th of this month. And I think, the timing of that was really well done. I think that maybe they were able to educate some of the people that didn't know what this stuff was or why it was a problem to not have clear rules of the road around it. And so it's gaining traction. We're seeing things move forward. Very timely for that to happen. So with that, we'll go ahead and get into the questions tonight. As always, fair game. If you guys want to run down anything to do with tax mitigation strategies, estate planning, wealth management component, borrowing, lending, earning, all the fun stuff that we anticipate coming down the pike for digital assets, utility assets in particular. So go ahead and dive into it here. This is a good one to start with. Blue Dog says, exciting days to be experiencing this financial revolution. What will next week hold? I think this week is going to be pretty big. We'll see, look, like I said, there's some green in the market. People get excited. I still think the top for Bitcoin 75,000, maybe 76, but that's my prediction. We'll see if it holds true or not. I know a lot of people are going to be upset about that. We've seen ETH rally, what are we up, like 13, 14% today, something crazy. Big jumps there. Some more talk about the Ethereum ETF. Maybe, with the Wells notice that consensus was served. It hasn't been a full-blown lawsuit yet. Joseph Lubin and Consensus and others have, kind of clapped back at the SEC, basically spinning around on them. We'll see where that ends up going. If we do get this regulation by Congress, or we also just got the SEC's rebuttal from basically what they want to keep redacted on the motions and disclosures on the final pieces of the Ripple case. I don't know if you guys follow James A or F Flanagan there on the Twitter or X, whatever you want to call it, but he's a great resource. He always puts things out very timely when they are filed in that case. Big proponent of his. So with that, go ahead and hop in here. Atlantic Living always has fantastic questions. Appreciate you being here. They've asked recently, BB and BCB. I know blockchain background. Oh, Bearable Bull. That's what I guess BB is going to be. We're very critical of XRP's lack of community engagement. They stated Ripple promised $1 billion to XRP builders and developers and only have provided 15 million. 1% thoughts. I have some strong opinions about this. So Ripple's not a foundation. Okay. They are a for-profit company. And when you're doing due diligence on companies and they don't meet the criteria for investment, you can issue an LOI. Okay, so as an example, Ripple put out an LOI on Fortress, which is a letter of intent. So when they put that out, everybody was excited. They were going to make an acquisition. And then they did due diligence on the firm and found out it was very lacking. And so they pulled out of the deal. That happens all the time in business, and people get butthurt about it. They can be butthurt about it. But again, there's lots of nonprofits that are associated with other blockchains, okay? And so they provide grants for development on the network. Ripple, again, is a for-profit company. So they do have the XRP Foundation, which is a nonprofit that does make distributions and grants. But Ripple themselves, if they are the ones that promise the $1 billion, they're going to make sure that people are legitimate, make sure that they have a viable business model, make sure that the people involved with it are not shisty or have a bad background or are not going to do what they say that they're going to do, right? And so, there's Casino Token, there's Expectar, there's a bunch of these other projects out there that are upset with Ripple. But again, they entered a conversation, they did due diligence on the company, and then for whatever reason, and they don't even have to give a reason. That's the other deal. Again, they're a for-profit company. They can decide at any time whether or not they're going to make an investment or not, just like you can. Okay, so on the other side of price appreciation, when you enter into an engagement with somebody, be very particular. Vet them, make sure it's legitimate. Do your due diligence. If you don't understand how to do that on an investment or a company that you might be allocating to, get a team of people, get analysts, get people that have done that before to review the people that are involved, the team, the market, the demographic that they're selling to, their product, their financials, the projections. All of that's in scope when you're doing due diligence on firms making an investment in them. And so Ripple made allocations to Futureverse. They've made allocations to XRP markets or XP markets. And obviously, if they did the due diligence and they felt that it was appropriate, then they made the allocation. But again, people can get butt hurt if they entered in conversations and felt like they were justified in receiving something and they didn't, which I understand. But business is business at the end of the day, and you have to do what's best for you and your company. And if they didn't make an allocation, that's what they felt was best. So I can't get mad at Ripple. Just because they have set aside $1 billion for that doesn't mean that there's not going to be a lot of other firms or companies or solutions that come forth, especially after some of these other amendments come into vogue. I know Ripple's big focus this year is on DeFi in particular. We've had conversations with them and their team. We met with them last year at Swell when we attended the conference, and they didn't allocate to our project. Just so you know. We approached them about that, and they were like, well, if it makes sense in the future, we might come back and revisit it. You don't hear me bad-mouthing Ripple. Okay, cool. It didn't make sense at the time. Maybe we'll revisit later. I'm not mad about it. I'm going to fund it myself, or I'll go find capital somewhere else. I don't feel like it's Ripple's job to fund my dream and vision to build something on the XRPL. So anyway, rambling on here, but that's how I feel about it. I think that, they're very nice for even putting that aside to be able to put that in on deals. But again, they're a for-profit company. So if you want to go develop on another network that has a nonprofit that isn't stringent about their grants, more power to you. There's lots of those. But if you want it from Ripple, you're going to have to prove it and make sure that you are a legitimate project and that the space is going to be better for you participating in it. Well, I'm not even sure what this means, but it sounds good. 401k with an 8% match versus additional XRP. Oh, you're making an allocation to your 401k. You put me on the spot with this one. So let me start it off here. Nothing said here is financial advice. It's only for entertainment and educational purposes only. Always consult with your financial advisor before making any investment decisions. If you do have an interest in that, we do have a firm underneath Digital Ascension Group. It's Digital Wealth Partners. You can go to digitalwealthpartners.net and set up a time. And we do have advisors that can work with you that can advise, but I'm not one of them. So I'll just tell you what I would do and how I would think through it. An 8% match is pretty good. Free money is free money. About market conditions at the moment, there's a lot of glaring, flashing lights, canaries in the coal mine that we're going to see a big pullback in the stock market and crypto. Like I said, my prediction for the top 75K Bitcoin, you can get mad about it. I'm okay with it. That's just my 2 cents, right? I could be way off, crystal ball. I don't have one. Maybe it's going to the moon, goes to 1 million. Best to you. Well, I'll say this too. XRP is the most undervalued in comparison to total market cap in crypto that it's been ever right now. So for me, I'm just not going to answer this in the way that you want me to. This is how I would think through it. Great. Free money's great. If I made that allocation, I would feel good about that. If I bought XRP right now, I would feel really good about that too. So I know that's not what you wanted by the question. You wanted a definitive this is what I would do. But like I said, I can't give financial advice. I'll say it this way. I don't have a self-directed 401k or an RIA at this point. Everything I own is in digital assets and XRP in particular. So, you see where I stand on it. You make your own decisions. I can't make them for you. This is good. DB says, once your assets are in an LLC, are you able to trade in and out of them, or you simply have to hodl them? Yeah, you can trade in and out, but you're still going to have the tax implications, right? So just like you would in your personal name, if you have a trading LLC, if you're in the business of trading assets or financial contracts or other things, then you're only taxed on what you're up or down at the end of the year, and that's your income. So it's going to be taxed at 37.5% if you're over, if you're married and you're north of 650 grand. And then depending on what state you're in, you could have extra taxes on top of that. And you're going to want to pay yourself a reasonable salary if you're going to do pass-through taxation and file as an S corp. So again, you're going to have to pay yourself, a reasonable salary is $50,000 to $70,000 in the eyes of the IRS, which you will have to pay, your W-2 taxes on. So Medicare, Medicaid, Social Security, that's another 13.5% that you're going to owe. With that, but the rest of it would just be, short-term capital gains, which would be taxed as income. Anytime you're swapping between this asset and that asset, tax implications, the longer you've held them, the less that is. So if you're going from short-term to long-term capital gains, it goes from income tax brackets to less than 18,000 is not taxable. 18,000 to like almost $500,000, a little more than $500,000 is going to be 15%. And then anything above that is going to be the 20%. But you do have the capability to use those funds in a way that you can purchase assets or do things with them to offset that income, and then lower your taxable income that way. So short answer, yes, you can trade them inside there, no problem. But you do have to be concerned with the tax implications. Let's see here. Atlantic Living, always, again, good questions. Do you believe most individuals simply leave XRP on exchange or wallet? Many influencers don't highlight the massive amount of people that hold XRP simply on exchanges. Curious your thoughts. It's a good question. A lot of people just hold their assets on exchanges and do not purchase a cold wallet. Some people don't want to deal with it. It is cumbersome. It's scary to send, potentially whatever a lot of money is to you from one wallet to another. If you fat finger one character, then your money's gone, right? I've sent thousands of dollars into the abyss, never to see it again. Just moving stuff around, copy paste the wrong address, and she's gone, right? So a lot of people I know do leave it on exchanges in the omnibus accounts there. But again, those aren't your assets, right? So if you're leaving them in the pool, it's just like you're putting money in the bank. You're a creditor to the platform that you're holding those assets on, and they owe them back to you. XRP in particular, I look at the wallet there. So the wallet address is like the routing number, and then you'll have a tag, which is like your account number at the bank. But yeah, I would say probably, I don't know, maybe 20% of the people I have conversations with just have their stuff on exchanges and don't have a cold wallet. So, and then some of them have on exchange and then multiple cold wallets also. They leave an amount on the exchange that they plan to cash out in the short term when they have certain prices that they hit. And sometimes they'll set a limit order, or they've got it at Caleb and Brown and they'll execute a sell at a certain price. It's all up to you. People definitely do it. I would rather have my stuff on a cold wallet, just personally. But we keep our stuff in qualified custody now with standard custody. Hoping to have a conversation with Ripple later this week on that side of things. Hopefully some good news coming out about that. to the public here soon. So excited. But and I think, that's probably where the majority of the space goes. If you've got $1 million, $2 million, $10 million, $50 million, $100 million, do you really want it on a flash drive that you could lose the keys to? Who's the guy that's associated with Ripple that has like billions of dollars of Bitcoin in a wallet that he just can't get to? I think it's Craig DeWitt. He's got like 2 tries left before it like just explodes and self-detonates, and he doesn't get the Bitcoin off of there. You only get 10 tries worth of passwords before it removes your access. So stuff like that, how much Bitcoin's been lost. I think when I looked at it the other day, it was like 17% of the supply is just gone, never to be, had again. It was on somebody's hard drive that they threw away. It's in a dumpster somewhere. It's just not ever going to be seen again, which is great for the people that still have it, right? Price appreciation because there's supply and demand. But just, yeah, I think that things are going to move fairly quickly over the next 6 months to where qualified custody is kind of the norm for most people that own digital assets. And you'll have insurance, you'll have recourse, you'll have beneficiaries, you'll have all the things that you have at traditional financial institutions for your digital assets. And then there'll be some diehard people that just always want to keep it on a ledger. More power to you on that side too, as long as you have a crypto buddy or a spouse or whoever you have close to you that's going to end up with that, and it is denoted in a trust or a will, I think that's okay. But, again, my preference is qualified custody. This is going to be one of those nights where the chat runs up and I don't get to everything. So I'm going to try to move a little bit quicker because we're already 20 minutes in and I've done like 4 questions. Vel says he's joined the Mastermind group. Awesome. Really glad that you've decided to make that jump. Hopefully we provide you a lot of value. They say, any advice on what to do in the first month as a way to get acquainted, or just kind of random and see what combos interest me? Yeah, so there's a bunch of different channels there in the Discord. If you just did the social membership, we have everything from like health and fitness to performance, different types of investments. If you're in a different jurisdiction, Canada, the UK, or Australia, you have your own channel where people go back and forth about advisors in there that they've been able to work with. A lot of those recommendations we've been able to make for people because of the network that we have. But they talk about different tax implications, moving their stuff into trusts. And then we just have some fun channels too, where people talk about books that they read or recommend. We post social media stuff, things that are relevant to the group, motivational things. So I would recommend, if you are new to the Mastermind, and not just you, but anybody else that's watching this, if you would go over to the self-promotion channel and just let people in there know what you do. That's always helpful, right? So everybody has different hobbies, interests, and expertise. You don't have to dox yourself, right? Just, kind of give people an overlay overview of what you like to do and how you can help the group. And if you provide a service or a product, we always try to promote within the group when people are looking for stuff. And then, if they do have a question in a specific area, maybe it's energy or oil and gas or lumber or logistics or accounting, or we have people that are in all different types of professions there in the group. And so it's really nice to be able to come together, and basically any question you might have, we have really intelligent people in there that can help you. So like I said, if you haven't been over there to the self-promotion, that would be the first place I'd check out, and then bebop around. And then we have the town halls every Saturday and Monday. We had one earlier today where we went over. Mondays tend to be focused primarily on digital assets, whereas Saturdays more of a kind of a broad encompassing scope. We do Q&A, and then we also go over the private investments that we're running there in the group. This is good. JL says, 20-year-old girl buying XRP monthly. What general investment options or strategies might help achieve financial stability by 30 to 35? Looking for common approaches or vehicles to explore. Congrats to you for being so young and just having any inkling to try to set yourself up and be financially free by 30 or 35. I was not as mature as you at 21. So kudos there. Strategies that might help you achieve financial stability by 30 or 35. You want to generate real returns, right? So whatever that's going to be, and I'll kind of go through, I've talked about this before, but wealth creation and wealth management are two very separate skill sets. Wealth creation normally involves somebody taking a risk, going all in on one thing. Sometimes that's a business. Most of the time it's a business. Sometimes it's an investment where they have an edge over the market, where they see something that other people don't. And most of the time that people will call you crazy. If you really have found something that is legitimate and good, most people aren't going to be able to see it. You know, you probably have that conversation regularly with digital assets and XRP in particular, if you're talking to other people. So, you know, you're going to build your wealth in one vertical, and then kind of like a tree, once it's built, then you'll diversify at the top across, you know, different swaths of the economy. And this is the wealth management component, and this is the wealth creation component. So different vehicles. Life insurance is always great. I say that it's a tool. It's not always great, but it's a good option for somebody in your age demographic, especially if you have, you know, a good chunk of change that you can put inside that policy that's going to be able to grow there tax-free. A lot of people are going to try to pitch you on a 401k or an IRA. I'm not that person. We do work with business owners that make allocations to those things where they're able to write them off and then invest the capital, right? So that's a benefit there. But you're not ever like, you're going to listen to Dave Ramsey, and you're going to listen to a lot of these other people that they look at the world how it used to be. They also look at the world how it's been the last 50 or 60 years with interest rates continually dropping. Borrowing capital became cheaper and cheaper and cheaper. Real estate, you'll hear lots of people say real estate. And those are all good things. I'm not saying that they're not, but I would look at ways to set yourself up so that your assets are protected. You limit the liability of people being able to take them from you. So a lot of time that's a trust or an insurance policy. And then the other component of that is mitigating taxes. So educate yourself, you know, like you asked for strategies here. I would just, there's a lot of different tools that you can have in the bag. And the more tools that you can understand, the better equipped you're going to be able to pull those out of your tool bag when you need them. Our firm has a lot of those. You know, we don't know everything. Don't pretend to, but we have a lot of people in our network that do know a lot. And are experts in different fields and areas. And so we're able to, you know, have conversations with them and refer people out and make sure that we provide a full scope of services to our clients. If you're looking for common approaches, that's going to be most people's common approach is they're just going to make an allocation to a 401k or an IRA and call it good, or an index, you know, the S&P 500. The problem with that is you don't ever really get any real returns. The S&P 500 really just keeps up with inflation. Whatever, you know, the value that your money has when you put it in there for purchasing power. That's the term I'm looking for. I'm sorry. Whatever purchasing power you have when you put that money into, let's say, gold or the S&P 500, you're just going to maintain that, right? It's not really a real return in most instances. If you're trading the market and you are able to pick tops and bottoms, sure, you can generate some real returns. But if you just left it in there over your lifetime, you're really just pegging that purchasing power whenever you placed it in one of those vehicles. You want to get accredited as fast as you can or get into a situation where you can get access to private investments. The alpha on that in comparison to just traditional stocks and other assets tends to be substantially higher. And you will generate real returns with that over most other circumstances or investments. But it's risky, right? So make sure you're doing due diligence on things and understand how to value a company and hedge risk if you can. That's the other thing that I see a lot of people that are younger don't really do well, and even myself included when I was younger. If things went up, I made money. If things went down, I lost money. And if you can make money irrespective of direction, that's what you want. If you can make money off of volatility, it's also what you want. And that's how hedge fund managers and people that really manage capital well, they don't care what the market does. They're hedged for either direction, and they have options and things in place that allow them to capitalize whichever way it goes. So I know I just rambled on a whole bunch of stuff there, but hopefully some of that was valuable for you. Again, I'm still super impressed that you are the age that you are and you're buying some XRP and you found this investment at such a young age, and even have, financial stability and freedom. You're thinking about that. So kudos to you, and hopefully that was helpful. Scroll on down here. Honest Aim, thank you for the super chat. He says, thanks for all you do in the Mastermind. Brad Garlinghouse under fire for Tether comments. Tether Prez, I guess the president, on record that U.S. market is not important. Seems Brad made a good comment. Others pissed. What am I missing? If he hadn't felt threatened by that comment, I don't think he would have even made a retort to it. So a lot of the time, the way other people react to your comments says a lot about their insecurities, or if they don't care. If they think it's true, then they'll probably, clap back a little bit. And it's never wrong to, defend yourself, but I think the way that you go about it is a little bit different if you don't believe some of it's true. So, Brad uses Tether, right? So like Ripple uses Tether and ODL. It's more liquid than XRP in certain corridors. And people can get mad about that, but they are issuing their own stablecoin to be able to facilitate that. If both parties on either side of the transaction want US dollars, Tether's currently the way to go. But I think, the liquidity that they will have in their stablecoin will probably supersede that at some point in the future. When? I have no clue. Maybe Tether gets rolled into the U.S. Treasury or something else, and it does become compliant and it sticks around. All that's yet to be seen, right? Maybe that's already happened. We'll see. But anyway, it's a good question and good point you made there, Denny. Appreciate you being in the mastermind with us, you and Janet both. Go on down the list here. This is a good one from Chris. He says, I'm from Australia, and I'm looking to set my crypto up where I can mitigate large amount of tax that I'll have to pay. What's the best way to contact you? If you want to get in touch with our firm, and we're happy to make referrals and introductions to people in different jurisdictions as it makes sense, just reach out to us at info at digitalfamilyoffice.io. And you can set up a time, book a consult, or you can just email us. If you just want to email us and ask us, we'll get back to you. And, especially if you're just looking for a certain type of professional, it's a CPA or an accountant or, somebody for your estate or, again, the wealth management component we do now. I'm just happy to share resources with people. You don't have to pay or book a time if you don't want to, if that's all you're looking for. If you're looking for a little more guidance around things and how to orchestrate it, or you do want to talk with our team, then we do have that option as well. And we talk about, all this stuff in the mastermind group, Beyond Broke Mastermind. It is mastermind.beyondbroke.com if you want to go check that out as well. Let's see here. Another super chat. Thank you, Marsha. I appreciate you for the kind words. And just try to help the community. I want everybody to win here. I think that a lot of people have been here for a long time and made sacrifices and have waited and put things off and done things, that they're hoping they'll get a return on. And so I think a lot of people just are unsure on some of the stuff that I cover in particular, and I'm happy to get on here and answer questions and help people out as I can. So I get a lot of fulfillment from it. I appreciate you guys taking the time to tune in. Let's see here. Yo, Mickle sent you over. Appreciate you, Fig Nuts. Yeah, Mickle's one of our advisors with the firm, and super excited to have him with us at Digital Wealth Partners. Pretty pumped. You know, there's a lot of people in the space, and the reason we formed the firm. So just to give you guys a little more context around that for Digital Wealth Partners and the RIA. I've had calls with tons of firms all over the U.S. I take my time out. You know, I took the time to call over 200 professionals to figure out who is good and who we work with now here domestically in the U.S. and internationally. And then, you know, within that, we've had conversations with lots of different RIAs that said they're proficient with digital assets. There's only 6 people like ourselves that provide clients with institutional custody domestic here to the U.S. And we're one of 2 family offices that do it. The other family office only deals with individuals that are north of 100 million in assets, very, you know, affluent family offices. And that's their niche. We tend to work with, you know, somewhere between 20 and 100 million on the lower end of that. And then obviously individuals that have just 100,000 in digital assets that anticipate a significant liquidity event. We also bring down the threshold for our custody for them as well. So I don't believe there's anybody else that has a threshold as low as we do for digital asset custody for their clients. So anyway, yeah, super excited to have Mickle on with us, and you know, I appreciate him sending people over to the stream here. I know he was just on, you know, about an hour ago, giving updates on the market. So thanks for hopping over here. Lorit, he says, you have said before you believe BTC will only go to somewhere around 75K, and Brad Garlinghouse has predicted $5 trillion market cap by the end of the year. Do we get to 5 trillion without the help of Bitcoin? I think so. I think that there's some other assets that could see some pretty significant price appreciation, and I'm a little bit more bullish than Brad is personally. I think 5 trillion is probably a conservative thesis on the amount for where the market goes this year. I think that we're possibly 10 times that. I could see a $50 trillion market cap this year for crypto if we do get real utility and adoption of some specific networks and volumes for global transactions were to move on them. I think you really could see a $50 trillion market cap for crypto without the help of BTC. Oh man, Mickle sent some people over here. Thank you, Mickle. Appreciate you. Man, all across the chat here. We'll have to get Mickle back on for you guys. I think we had a really good discussion last time he was on here. There we go. Appreciate you for the super chat, Chadwick. I guess he must have told y'all let me know that he sent y'all. That's awesome, man. Let's see here. Man, lots of comments. I'm trying to get through here and make sure that I answer questions. Here we go. This one's good. Birdbrain Investments, you know, they're anonymous on here, which is good. He says they have 40K in private equity and utility crypto. I also have a holding company in Wyoming for real estate investments. Do I need another holding company for digital assets, or can I bring it all under the same LLC? So you want to silo risk, especially real estate in particular. Hopefully you have separate LLCs underneath that holding company specific for your real estate properties, just so that if something were to happen, somebody falls, somebody gets hurt, if somebody sues the property, they're only going to be able to take that property in a lawsuit, and the rest of your estate's, you know, segmented away from that and de-risked from potential loss. If you don't have that set up, I would recommend, doing that. It's not overly costly for the protection that it gives you. Happy to help. Our firm can help set that up for you if that's something you're interested in. Your digital assets, again, you would want to silo the risk away from the real estate in some way. So maybe that's held with the holding company, and then you have subsidiary companies that the holding company manages that have each one of the real estate properties in it. Maybe you have a C Corp that sits at the top that has, a digital asset LLC and then a real estate LLC. When we work with clients, that tends to be what we do when we're helping them build out their family office. Is they'll have a C Corp that's a management corporation that they run, sometimes with our help, and then they manage the assets within these LLCs. They have a contract. They don't have ownership in the LLCs. The ownership for the LLCs sits in a DAPT, which is a domestic asset protection trust. Most of the time, that's great if it's filed in Wyoming. Sometimes it can be advantageous to have it in a separate state or jurisdiction, right? Doesn't even have to be domestic to the U.S. But that way, the equity of the LLC sits there. The LLC generates profits and pays taxes for the trust at the corporate level, and then you get your distributions paid to the management corporation for services rendered based on the performances of the asset. Again, that's just kind of how we set things up. I'm not saying there's a right or wrong way to do it. There's lots of different ways to do it, but we feel like that's one of the best ways to mitigate risk and create the best option for mitigating taxes. Let's see here. He's at Vancouver Canucks, and they're at the finals. Appreciate you for the kind words, Mark. Max has asked if you guys wouldn't mind clicking the like button. I'm bad about that. I don't say that probably as much as I should on these things. I know Mick will always interjects that like first thing. He's like button, subscribe, share. But yeah, if you're getting value from this, if you wouldn't mind, just tapping the like button or subscribing to the channel or sharing it with somebody that you think might find it interesting. All those things do help the algorithm and help us reach more people and hopefully, again, provide more value. This is good. Taylor says, can you talk about how Ripple's investment in custody solutions and their institutional partnerships can give them advantage with real-world asset tokenization? Yeah, absolutely. So you have two basic components for tokenization of financial products that have to be in place before anything else. They talked about this at Swell, and they've continued to double down on that. One is digital identity. So you need KYC, AML, OFAC, BIS, accreditation. All those things need to be vetted and done for any individual that are participating with these assets. And then the second component is custody. So Ripple has, put their money where their mouth is. They made the acquisition on Medico, and now they've made the acquisition of Standard Custody. Standard Custody did not come with the IP. PolySign still licenses that IP to Standard Custody, which we use. We're the only wealth management firm that has access to their infrastructure and works with them in that capacity. Tokenization of financial products and securities in particular. I think that they're super well positioned for that. Medico has a product called Harmonize, where you can build out the governance around payment flows, and you can build in it's kind of a smart contract deal where you can have if-then statements. If this happens, then this is the course of action. If that happens, then that's the course of action. And then, above certain thresholds, you might have to have multiple signatories sign off on something to be able to execute within, a banking infrastructure. All that stuff is absolutely necessary. And that company just provides the software. Standard Custody has the license as a trust bank there in New York. It's the only licensed trust bank that's held digital assets in New York because of the stringent financial requirements in that jurisdiction. And so, for Ripple to make that acquisition, I think they're positioned very well to be able to be the leader for tokenization of real world assets on the XRPL and provide a whole new scope of products. Again, talked to Jack earlier today. Hopefully we get to meet with Ripple later this week and discuss long-term vision for standard custody and how we're involved in that. But yeah, I think that they're going to be the Amazon, right? That's been their stated mission from the jump. Put a dent in the universe, and I think that they're executing on that every single day. Let's see here. Scroll on down past all of the awesome Mickle comments. Here we go. Jacob Cole says, hey, just subscribe to Carbon One. Looking forward to working with you guys in the near future on the subject of paying yourself a salary. Is it possible to pay each family member? Yeah, you definitely can. So I pay my wife, she's on the payroll. She does stuff for the company. And, my son, here's the deal. You can pay them tax-free up to, I don't remember if it's $12,000 or $14,000 a year. I'm going to get with my CPA on that. I think it's 12. I think it's $12,000 a year. You can pay them tax-free and you get to still write it off. They don't pay taxes. You don't pay taxes. And then beyond that, you can make a contribution to an IRA for another $6,000 or a Roth for, 65. And you get to write that off as well. So you could also take out insurance on them if they are a key employee of the business, if the business would lose money if they did not participate in the business or operate in whatever capacity they do. They do have to do something in the business, okay, that is provable. All right. So sometimes that's marketing. Sometimes if you sell a product or service and you use your family photos in the marketing of the business, then you can compensate them for that. Maybe your kids, scan your receipts. It's something I did for my dad when I was working for him when I was young. That's BS, and I really didn't do a very good job, and he was very nice to continue to pay me. I would have kicked my ass. Just reflecting on it now. If they just need to be doing something within the business that justifies the compensation that you're paying them, right? So just be aware of that. It can't just be like, here you go. Otherwise, it's a gift, and you can gift people up to $18,000 a year and write that off too, right? As long as you haven't met your lifetime gift tax threshold. So I see lots of business owners do that. They'll just gift their children, somewhere between $13,000 and $18,000 at the end of the year. Write it off, and they put it in a savings account or something else that earns interest, or they just give it to them. So there's lots of different ways to go about it. Again, you want to work with your CPA on that. We have people at our firm that I can refer you to that are some of the best in the nation, especially with digital assets. So that would be what I would have to say around paying your family out of your LLC. Xav Basadin, I probably butchered that. Thank you for awesome info. Do you know the reason why LLC is not legal in Canada? I don't know what the reasoning is there in Canada for not being able to have an LLC. Probably don't want you to be able to mitigate your taxes. Just being real with you, they want you to pay. With the legislation they just passed about 66.7% capital gains tax. Man, I can't believe that. The one benefit about Canada, I will say though, is you can gift until your heart's content. There is no lifetime gift tax threshold there. There's no limit on gifting, so you can move stuff into an entity at any point with no tax implications. That's not the case in almost any other jurisdiction on the planet. So you do have that benefit working for you there. So as long as you're not cashing out, you can get the assets into a trust or something else offshore that can provide you some benefit. Aaron Grinhaus is our partner up there in Canada. And again, happy to make an introduction to him if that's meaningful for you. Um, this is a good question. Zoomed Out says, thinking about getting an LLC started, but can I get it done without naming a beneficiary? Yeah, that's no problem. Obviously in your will, you would probably want to designate somebody to retain ownership of the LLC, especially if it does own a substantial amount of digital assets. Otherwise, the state is going to end up with it. Or, they'll go to your next closest of kin. And maybe it's a brother and their children, sister and their children, cousin, stuff like that. You'd probably want to designate somebody in there that would take over the business. God forbid if something were to happen to you. I know other people that are in a very similar situation to yourself that have very large allocation to digital assets. In some instances, you might list a charity that you're going to donate the assets to upon your death, right? And again, all of that would just be listed in the operating agreement for the business, which you, being the managing member, could change at any time, as long as that right's given to you in that agreement as well. So with what we provide, it would be. But anyway, yeah, that, just a couple different things that you could think through there to be able to name somebody else as the benefactor or the new executor on the LLC, if you were to pass away. Let's see here. Linda says, what approximate dollar figure would you jump into setting a trust to secure future financial assets once the market takes off? It's different for everybody. But for most people, when your net worth passes $750,000 to $1 million, especially if you have assets that are going to continue to appreciate or produce significant cash flows, that's when you might look at a domestic asset protection trust. Tend to be somewhere between $15,000 and $25,000 to get that set up. You can go less than that. Again, like I mentioned last time we were on live, we had people that did that and didn't work out. The people just aren't as competent if they're charging less than that. But that doesn't mean if they're charging that much, they're competent either. It just means they know they can get it. You want to vet people to make sure they're good before you work with them. But a living trust, a lot of people, you might look at that. Normally the cost on something that's a revocable living trust or an irrevocable living trust in the state that you reside in could be anywhere from $2,000 to $5,000. And if you wanted to pass, assets from your estate to your children or somebody else with no estate tax or probate, make sure that the people that you want to get the things you wanted them to get, and there's no bickering or fighting. Maybe it's just a couple $100,000, maybe it's less than that. Most of the time, what you see in a living trust is going to be, your primary residence, vehicles, maybe vacation homes, ATVs or other toys, family heirlooms, gold and silver. That tends to be what we see in just a living trust. An asset protection trust tends to be for things like digital assets that you think are going to participate, substantially, real estate properties that cash flow, multifamily properties, commercial properties, other things of that regard, and then maybe private equity or equity in your own company that you think is going to go up substantially, where you might have a liquidity event. You would probably want to get into an asset protection trust previous to liquidating those positions, the acquisition going through. So anyway, hopefully that gives you a little more context. We do have 2 or 3 different videos on the YouTube channel here if you want to check them out, and should be able to kind of you get a pretty good idea of if you're in a position where you would want to set up a trust or not. Let's see. Brandon Rock says, Jake, when filing for my LLC, the IRS found an entity that was similar name, and now my SS4 form must be filled manually. Could take 20 to 30 days. Will this impact the timing of moving my digital assets into the LLC? I've talked about this before. So if you filed the LLC and you go ahead and do the operating agreement and get it notarized, they're in there, right? Whether you have the EIN or not, you've filed for it, and so the intent was there. And so if you could probably argue if something were to happen that they were in there previous to price appreciation. So that would be my, it can't be advice, but my take on it would be to go ahead and get your operating agreement established. Go ahead and get the capital contributions page notarized, and then you're within the time frame of after you filed it at this point. So I think you're justified that the assets would be in the LLC. Very odd that they found a similar name and then you have to fill it out manually, and it could take 20 to 30 days. Did you do that with us? Is that something that we've had a problem with? Let me know in the comments. I don't think it was with us, but if it was, I can try to expedite that for you. This person said the max they've seen at Coinbase is 100K for liquidations on the same day. Depends on if you have an OTC account or an institutional account, or if you just have a regular account with them. I have seen people, move things up. Kraken, you can liquidate a lot with them, and their fees are very low. Happy to make an introduction to their team over there on the institutional side, if that makes sense for you. Coinbase does have an institutional side. If you're moving $250,000, $500,000, $1 million on their platform, they will reach out to you. Or we can make an introduction if that's meaningful for you as well. I'm sure that they will be down at Consensus. If you're going to be at Consensus, we will be there at the end of this month, hanging out, walking around, meeting with people, setting up meetings. So looking forward to that. Exciting times. Yeah, see, nurses mentioned Kraken. Would check their limits and fees. Kraken Pro, if you guys haven't checked that out, I highly recommend. I doubt that you are not bright enough for the Mastermind, brother. Like, we try to distill things down to where they're easily consumable for people, and we have a lot of people in there that are earlier on in their journey, right, and maybe not been exposed to some of the stuff that I discuss on a regular basis. And so we have other people, and including myself, I will slow down and speak through things and kind of walk you and give you other frames of reference that I anything that I can to help you understand things. So don't ever feel like there's a dumb question or you're not competent or capable. We want to make sure that everybody has the same opportunity. So but if you do want something, if you want to check something out that I do think is great for just kind of a basic understanding of money, Mike Maloney has a video series called The Secrets of Money. It's a 9-video series, and it's here on YouTube. Brilliant man. There's another video on wealth cycles. If you just watch those two, it's probably 5 hours worth of content. He did that full production himself, paid for it all himself. Absolutely brilliant. Traveled the world, did a bunch of stuff. So, if you feel like the Mastermind's a bit too far ahead, that would be my recommendation. Just check out Mike Maloney's channel and go through The Secrets of Money, and then also his video on wealth cycles. Eric says, "Hey Jake, thanks for the LLC." Absolutely, brother. Appreciate you. Any advice on creating an Uphold business account? I am having some trouble with their questions and require documents apart from what I already have from the LLC. So they're going to probably want a letter of good standing, which you can obtain from Wyoming's website. You just Google it and pull that up, based on your EIN number. You can get that. It doesn't cost any money. It's pretty easy. They may want an operating agreement. Again, if you worked with us, we would have given you a template for the operating agreement that's specific for digital assets and a holding company. Any other documentation that they're asking for would probably be, personal information. Could be a bank statement or something else that associates the address you provided with the entity. Electric bill, something like that. Those are all pretty common things when you're setting up accounts either at a bank or an exchange for your business. But if you have some other questions and it's something outside the scope of what I mentioned, welcome to email us at info@digitalfamilyoffice.io, and we're happy to help any way that we can. Scrolling on down, people saying click the like button. So I'll say it again. If you're finding value here, would love it if you guys would drop a like. It does help the algorithm and help the channel, and it is much appreciated. So this one's good. Quantitative tightening. It's a good name. If XRP experiences price appreciation while using an AMM, if the paired asset doesn't increase, there's lots of ifs here. If the paired asset doesn't increase, if you pull out of the AMM, have you just lost XRP? Is there a limit to how much you can be lost? That's why I'm not putting any money in the AMMs right now. I'm not going to participate in them until after we have digital identity and institutional adoption, the capability to delegate from qualified custody to the AMMs, and I don't have the exposure for impermanent loss, which is what you just discussed there. Yes, you lost half of the appreciation that you might have had you not been participating in the pool. You're not. I mean, you could do a one-sided pool, but again, that's caused a lot of problems and losses for people. So, especially if it's a stable coin, like if it's XRP USDC, like you're definitely going to lose half the appreciation. If it's XRP Bitcoin and Bitcoin goes down while XRP goes up, which is kind of my anticipation, maybe it's a net break even, like you didn't make any money because the losses to one asset and the gains to the other one offset one another, which would be horrible. So the answer is no, there's no limit to how much you could lose, and there would definitely be losses if you were in an AMM while you saw price appreciation of XRP happen. Let's see here. XRP Kelly has asked what I think about Flare. I participated in the snapshot back in 2020. I was in. Seems like such a long time ago at this point. I ended up selling my Flare at like 29 cents when we got the distribution. Swapped it for XRP. I'm just being transparent. There's a lot of people that have stuck it out and it continued to accumulate Flare, especially when it was back under like a penny. And I think they'll be really well served for that personally. The majority of the people that would have participated in the snapshot when there was only 2.7 million wallets would have been banks and FIs holding XRP at the time. Ripple and Ripple employees could not receive the snapshot. David Schwartz is not a Ripple employee. He is a contractor. And his thesis is don't miss the next Ethereum. So, because he sold his Ethereum at like $1 to put a new roof on his house, like 40,000 Ethereum at $1. So, if that's his thesis and Flare is the next Ethereum, which it very well could be, the time series Oracle, like I don't think people really understand the implications and like how big a deal that is. Layer cake is super important. The different ways that you can earn yield and the minting of F assets. My concern on the F assets is you do have to, the other party could run off with your asset that you minted the F asset of. They do have to post 2.5 times the collateral and Spark tokens of whatever you're minting. I understand that. But if they thought that the asset that you posted was going to, increase in value more than what they put up, they could run off with it. And obviously there's other implications for that, and it's, you know, frowned upon. You probably wouldn't be able to participate in things after that. Could be the way that the institutions continue to take people's XRP after price appreciation happens. It's my conspiracy theory. I wouldn't be participating on Flare's network and minting FXRP in particular unless I had both sides of the transaction. So I had enough Flare to put up to mint the FXRP myself, and there was no counterparty risk. That's just my personal preference, though. I'm sure that other people won't listen to that and won't do that. But like I said, I think the majority of the people holding Flare at this point probably are financial institutions that did get large allocations of that from the snapshot in 2020. And there is a possibility that that is one of the primary DeFi protocols that the banks use to compete against, you know, some of these other things that exist in the space. So let's see here. This one's good. Yo Entertainment. They say, Jake, can you explain why it's beneficial to have a trust or LLC set up prior to liquidity event versus after liquidity event? Absolutely. So I'll give you I'll give you all three scenarios. Okay. Let's say I'm an individual. I'm not married. I'm single. Don't have kids. I have a good bag of XRP. Okay. Or any digital asset. We'll just be agnostic here. We'll say any digital asset that I think is going to appreciate substantially. I've got $300,000 worth right now. Okay. The token is going to go up 100x in like a week when we do see price appreciation. I'm in a meme coin. I'm in something that's going to really appreciate when it's used, or people are going to pile in on this thing. I got in early on, you know, a meme coin, and I really went heavy. So, because of how quickly that's going to happen, each individual here in the U.S. in particular only gets 13.6 million now. Excuse me, 13.6 million that you can gift into a trust with no tax implications. So, if you believe that your assets are going to be north of that, you're going to be taxed 40% just for moving it into a trust later on, which you're going to want to do. You're going to want to protect your assets and make sure that if somebody sues you, they can't get your stuff, right? Because everybody's sue happy here in the U.S. As soon as they find out you have some money, they might rear end you and then say you hurt their neck, right? And then they sue you and somehow they win. Fall on your property, and just people do crazy stuff. So you want to protect yourself. And so you'll want to get the assets into some type of estate and out of your ownership. You want to retain control of the assets. The wealthiest people control everything and own nothing, right? So everything's protected and they can pass it on to their children and do other good things with it. Maybe it's philanthropic interest. It's not even going to go to their kids, right? So if you just had that in your personal name, in order to get it into an estate, you're going to be taxed super heavily for anything beyond the $13.6 million threshold. If you go to liquidate, you're going to be stuck with the tax implications. Even if they're long-term tax implications, it's 20%. And you have no way to offset or mitigate those tax implications. So, let's say you cash out $1 million, just go ahead and take 200,000 and send that to the IRS. I don't know about you, but I don't want to do that. I don't want to, I put up with a lot of stuff to get this price appreciation. And for me, I'm wanting to use as much of it as I can to make sure that my family's taken care of, people around me are taken care of. And then I've got enough resources to really do some impactful things in my community and with other things that I'm working on. And giving it to the IRS or the government so that they can misallocate it is not in my priorities. Okay. So, and some people, but I will say some people are completely cool with that. Okay. I've met lots of people. I would say like 2 to 5% of the people that I meet with, all this other stuff is too complicated. They don't want to deal with it. They're later on in life. Maybe they just want to enjoy it. They don't care to build an empire, mitigate taxes, or do any of the stuff that we help people do. So they're like, cool, I'm going to cash out my mill. I'm going to set 200,000 aside. I get to keep 800,000. I'm good with that. And I'm like, great. Just know have these conversations and understand an LLC and trust is not ideal for everyone. Okay. They can be beneficial again if you want to mitigate tax implications and set yourself up for future price appreciation so the assets can grow tax-free. So the individual, you're stuck with stuff. If you're inside the trust, you get some flexibility. Or sorry, if you're inside the LLC, you get some flexibility. So one of those things is a key employee insurance policy. We can write off the payment of the funding of the policy. We can use PPLI or private placement life insurance. We have to have at least $5 million in order to do that. And you can write off that full amount that you use to fund the policy with against your income that year in the LLC. That's pretty good, right? So you could cash out $5 million and donate to, not donate, but fund an insurance policy and be able to offset those tax implications. It doesn't quite work like that for the most part. You could also purchase a vehicle if it's over 6,000 pounds. You write it off. 60% of it is what I think you can this year. But if Trump gets back in, I think it'll move back to 100% accelerated depreciation, Section 179 of the tax code. So that's a benefit. Same thing for software under the same code. And then the other thing that you can do there is buy properties and use accelerated depreciation or cost seg on those, offset things inside the LLC. And if you did want to move it into a trust, you can gift small portions of equity of the LLC to your children or people in your family or network that you want to take care of anyway. And then we can get a valuation done on the LLC and get a reduction of the value, even though so let's say the underlying assets were $100 million. We could get a reduction of the value 25% down to like 75 million. And so now we can move more of the assets into the trust than we would have been able to before. And then obviously if you have the trust set up, you don't have to worry about anything. It's already in there. It's already out of your name. You already have your trustee, your distribution trustee designated. You probably have it in qualified custody with us. And now you're just sitting back waiting for price appreciation, knowing that you're set up and you're not going to have to worry about, you're still going to be you're probably going to take some profit. But when you do that, you're going to be able to mitigate the tax implications inside of the trust or the LLC that's associated, like I talked about before, with the trust. So I know that's a lot, probably drinking from a fire hose. And if you need me to run back through it or ask any other questions around it, I'm happy to provide clarity. But the main benefit is to mitigate taxes and set yourself up with flexibility in the future to establish your estate and make sure that your stuff's protected. Man, scroll on down here. We already been on about an hour. Thank you all for hanging out. Zach Rector, hey brother, hope you're doing well. Glad you got the YouTube channel back up and running. Let's see. Matty G. He gets me every time. I always want him to be the YouTuber, Matty G. But he's in the Mastermind group. We get to see him in there, so he's good people. He says, you mentioned forming a trust usually makes sense for large amounts of capital and costs $15K to set up. Is it possible to set up after price appreciation? Any cons? Yeah, you would definitely want to set it up after price appreciation. Again, just the gift tax threshold here in the U.S. Let's say it's you and your spouse. You get 27.2 million that you can move the assets into the trust out of the LLC and gift it, and that's your full amount for lifetime gift tax. If you wanted to have more of that left over to be able to gift to your children during your lifetime, you'd probably want to do it sooner than later so that you don't eat all of that up. Excuse me. And it's normally like 20 to 25,000. I say 15, like it's a bare bones 15 if you're going to do it that way. Normally costs a bit more than that, but it's not here nor there. After price appreciation, you're going to potentially be subject to, other taxes, estate taxes and gift taxes. again, as long as it's in an LLC, then we can set up the private placement life insurance as a key employee and write that off. So if you do, take profits, we can offset those with that contribution or funding of the policy. If you're going to do it if you just, let's say you didn't do any of this and you just left it in your personal name and XRP goes to $1,000 tomorrow. Okay. And you've got 200,000 XRP and you're married. And so now you've got $200 million. And you're like, holy crap, what a wonderful problem to have. You could still set up, the life insurance policies for anything beyond the amount that you could gift into a trust, and then set the trust up as the beneficiary of the life insurance policies. And that would mitigate a bunch of the taxes for you, and it would get them out of your name. And the other benefit of them being inside the insurance policy is you can trade things in there with no tax implications, just like an IRA or a endowment. So con is you're probably going to have to pay some taxes or higher fees post liquidity event. Kevin says, what in tarnation is going on here? Just a wonderful, live show on Monday night, Kevin. I'm glad to see you're in here. Hope you're doing well. Let's see. This is an interesting question. Justice K says, do you have a retirement number? I have a financial freedom number, but I do not have a retirement number. I'm one of those weird people that I'm not monetarily driven. And I've been into this on some other lives, but the general premise is so, and I'll walk you through this because I think it's an interesting concept. So I'm sure you've heard of like Maslow's hierarchy of needs, and there's a bunch of different layers to that depending on who you listen to. I frame it in 4 different layers, and it's for somebody's focus, and it tends to coincide with the time frames that they think in, and then also the value of money, or the money that they make on an annual basis. So I would say probably somewhere north of 50% of the population is just in the bottom component here, and that's just survival. Most people think maybe a week or a month in advance, not much longer than that. They're not planning annually or 5 or 10 years into the future. They don't even think about any of that. They're just thinking about what can I do today to get by and make sure that my bills are paid and keep afloat, just pedaling along. There's nothing wrong with that, but that's their focus, right? Survival is their focus. The next layer beyond that, I would say, is I lost the word. Basically keeping up with the Joneses. So you want to look like you're doing well. So status is the word I was looking for. Sorry. Your concern is you want to do better than your peers, or at least keep up with your peers. And those people might think in 6 months to a year long time frames. Their compensation is probably somewhere between $100,000 and $200,000 a year, or up to maybe even accredited investor status as a family. If they, are well compensated and they do have, maybe a degree in something that's niche, or maybe they run their own business, but they don't ever, maybe they're self-employed and they're a contractor, and they have a specific skill set that they can kind of farm out, but it's not a real business that they could sell. But again, their focus is status. They want to look as though they're doing well. The level beyond that, and I would say that probably encompasses maybe 80 or 85% of the total population. The one above that is going to be freedom. And these people normally, like, their main focus is they want to be able to go and do as they please. They want to have the resources and, the network to be able to do that. And all of these people do have a number for retirement. It's this weird little people here at the top that don't. It's a very small portion of the population. But the freedom people, again, they want to be able to travel when they want to, and they're willing to forego a lot of these bottom pieces to get the freedom. So, sometimes they sleep on friends' couches while they're starting a business. They're willing to look stupid for a period of time while they're getting things put together. Most of them are business owners. They don't do well with authority and someone telling them where to be, at what time. And they tend to make, north of $500,000 a year at some point in their life in order to be able to facilitate the freedom that they're looking for. And they tend to think on longer time horizons. So maybe a 1 to 5 year time horizon, maybe even up to a 10-year time horizon. And then there's these little weird people here at the top that I kind of fit into. And again, I don't really have a number. I'm not monetarily driven. And their focus is purpose. Elon Musk, Bezos, Zuckerberg, people that have just obscene amounts of money that don't even care that, like, Elon doesn't care how much money he has. He just looks at it as a tool. It's just a resource to continue to build what he's trying to build. Obviously, having access to that is nice, and he can have homes and, a bunch of kids and all the other stuff associated with that. But there's not ever going to be a number that Elon hits and he's like, cool, hanging it up. He's not that guy. Same thing with Bezos. They're just wired different. And so that's the group that I sit in. I don't really have a number. I could, $10 trillion still wouldn't be enough for me. I would, there would still be things on my list at that point. I will create things for myself, ambitions and goals. So I know that's probably way out of the context of what you thought I would say. And I definitely, you definitely didn't ask for Maslow's hierarchy of needs, but that's kind of how I think through that stuff. And there's nothing wrong with any of these other people that are anywhere in the pyramid. Like, I know people that are super happy that make $60,000 a year. They have perfect work-life balance. They spend time with their children. They get to go to every event that they have. They work and they get to leave the worries of their job at work, and they get to come home, spend time with their family and grill out and do whatever else. But if that's what it is, then you're probably you're not going to be focused on freedom, or you might have status, but probably not much higher than that. So, and if you are, focused on one of these higher ones, you're probably going to have to forego any type of work-life balance for an extended period of time in order for you to be able to achieve it. And then, later in life, you can enjoy the fruits of your labor. So, rambling on, but good question, and appreciate you asking it. Let's see. Scrolling on down here. Brandon Outlaw says estate tax exemption is sunsetting in 2025, also cutting in half. Yeah, that's what I'm saying. Like the 13.6 right now is the highest it's ever been in our lifetime. I think it will go backwards. And so just my anticipation based on how things have happened in the past. I could be wrong, but I'm with you. Let's see here. Appreciate you, CJ, for the kind words. He says, does XRP need a cobalt to even scale to the big numbers we are all anticipating, 100 plus? Yes. Yeah, it needs a subnet that's implicit or explicit to the network to be able to scale to the amount of TPS that would be required for global adoption, right? People don't want to hear that, but that is the current constraint for the ledger and the network and the protocol. There needs to be some other type of layer or infrastructure that's adopted by the layer one that allows it to scale. They could batch transactions, right? And that was one of the other things I asked Matt Hamilton when I had the conversation with him around this exact subject here. Because because I'm aware of the limitations of the network. A lot of people talk about these giant numbers, but they don't think through what all things are required in order to achieve that. We could probably push to like 1,500 TPS right now, but that's not enough. Visa, MasterCard, a lot of these networks need 30,000 plus TPS just to be able to facilitate the amount of volume that they're doing on a daily basis, much less multiple networks across the globe and that total infrastructure. So there's got to be something. I don't know what it's going to be. David Schwartz has mentioned Cobalt a couple different times in Reddit threads. It has, nobody's been working on it supposedly since 2018. The team that was stopped, and so maybe there's something else separate of that. Matt Hamilton says it's dead. It's not a project that's currently being worked on, which was interesting to me. I asked about Cobalt, and he was like, "Oh, that's dead. Don't even talk about it." And then I was like, "Well, what would we need in order to be able to facilitate those types of volumes?" And he was like, "Cobalt." Okay. Anyway, yeah, interesting conversation, interesting character. I don't know what that is. I don't know how we get there. I have faith that Ripple and other people that are developing on the XRP will have something that would allow it to scale in a time of need. And I could be wrong. Let's see here. XRP Liquidity says a charitable remainder trust for 20 years can be free of capital gains and receive an annuity with tax benefits, especially if you're older. That is a great option if you plan to cash out XRP Liquidity. There's not currently a way that you can fund that with the asset itself. You would have to actually sell your XRP to be able to fund that to meet the requirements for the diversification within a charitable remainder trust. That's why I prefer PPLI over the charitable remainder trust, because you can actually fund it with the asset and remain and continue to have exposure without having to liquidate. So I know Mark Kohler and a lot of people like champion the Crutz, which is a charitable remainder trust on YouTube, and they are very smart individuals, but they are anticipating people liquidating their positions to fund those policies or the trust. So just keep that in mind. Again, it can be a good option, especially if you do have philanthropic interest and you want to set up a foundation. I would recommend doing that first. If it is something that's on your roadmap, we do have partners that allow you to set up the charitable remainder trust with their foundation underneath it. And then once you've formed your foundation, they'll sign off on the paperwork to remove themselves and for you to add your foundation afterward. And there's a couple different types of charitable remainder trust where the distributions are either paid to you first or the charity first. Obviously, paid to the charity first has better tax incentives. So, but again, it's a very effective tool, especially for those that are going to liquidate their positions. Two Born Autobee. What's up, Jake? He says, or they, I don't know if it's, anyway, gender correct. Do you have to maintain an LLC yearly with doc filings and fees for the life of the LLC? What happens if you don't keep up with that over the years? Does it affect the dollar accounts? Yeah, so Wyoming's pretty cheap, just to give you an idea. So over 20 million in assets in the LLC, they do charge a little bit higher fee. It is, like 0.0002% of assets within the entity that they collect on an annual basis. And then you have your registered agent, which is normally somewhere between $50 and $200 to maintain that. You might have a virtual office if you are international that you need to maintain, which could also, be somewhere around $150 to $300 a year. All in, worst case scenario, depending on what state you're in, it might be $1,000 a year to maintain all that stuff for your LLC. You also have the BOI. We do that for you. The beneficiary of intent. We follow that with FinCEN. It's a one-time thing. So It's not overly cost intensive, but when you do have a bunch of LLCs, it is imperative that you keep up with that stuff. If you are late on payments or you don't keep up with it, then you can rack up fees, and your LLC can become dormant and not capable of being used. So definitely want to work with your estate planner or whoever's managing that to make sure that those things are kept up. That is something that we do for our clients. So let's see here. OMC says, great show. Thank you, brother. As always, if you have a retirement IRA and you move some of the appreciated assets into the retirement annuity, you can exercise at 59 and a half years of age. How is capital gains tax calculated? So hopefully you have it in a Roth, and then you don't have to worry about that. But whatever you would be getting for the annuity would be taxed as income at that point. So especially if it's significant, you could be being taxed at whatever income tax bracket it would fall in. So if it's north of, you're married and it's north of 650, you're going to be paying close to 40% taxes on that, even out of an IRA. You just won't have the early withdrawal fees after the age of 59 and a half. The other thing that I don't necessarily prefer about an IRA is you can't borrow against the initial investment. You can only borrow against distributions or earned income off of it. So let's say you had assets in there that you staked, and those staking rewards went into a separate account inside the IRA. You could borrow against those, just not the original amount. So depending on how old you are, an IRA can be an effective tool. If you are close to retirement within 10 years of being 59 and a half, and you can fund a Roth with $75,000 or $7,500 a year, can be very effective. If you have an LLC and you wanted to fund the year previous and this year in the same year and be able to write that off, you can do that up to $6,500 per year. So $13,000 would be your full contribution, unless again you are older than 49 and a half, and then you could do up to $15,000 if you didn't fund the year previous. So it's a good tool. The closer you are to retirement, I think the better option that is for digital assets at this time. If you're further away, you're going to have a lot more options and flexibility keeping assets outside of an IRA, especially with the way things are currently held by the custodians. We're working on that, though. Scroll on down here. We are we're past an hour and a half, so I'm probably going to hang out about another 15 minutes here, and then we'll wrap it up this evening. I do see people dwindling off and going to sleep. So, again, everybody that's hanging out with me, I appreciate you. Hopefully this is valuable for you. If you wouldn't mind, again, clicking the like button or subscribing, it does help the algorithm and the channel. Go on down here. Some of these I've already been through. Let's see. He says, thanks, Jake. I was asking to get a feel for how long do we have with you. I'm not going anywhere. Like I said, I'm a little bit crazy on that side of things. I feel, I don't want to say an obligation, but I don't know. I feel like I was put here to do certain things and help people. And I've been given that opportunity, and I don't want to waste that. I'll always be around doing something that helps impact other people and providing value as long as I can breathe. So, in how many years do you think banks will custody crypto globally for the average Joe? 44O has asked. I'm assuming he's asking in how many years. I'm just giving you a hard time. I know that's what you meant. 2025? I think that's pretty realistic. You get a lot of solutions, especially if we do get regulation, like that's on the docket this week. If they repeal SOB 121 and institutions and banks can hold digital assets. You know, there's a ton of custody solutions already on the market. You've got Copper, Fireblocks, Medico, and other providers out there that provide the custody infrastructure for the people that have the licenses. A lot of them have already integrated. A lot of them have those solutions. And so, yeah, I think 2025, you probably have the capability to hold your digital assets with your bank and your digital wallet. I don't know if you work with a large bank, they've already migrated to a digital wallet instead of a bank account inside your app. And I think that'll come with, digital identity. There'll probably be some, digital wallets that also coincide with Google and Facebook. Why wouldn't they? They've already kind of alluded to the fact that that's where they're headed. But, a lot of people utilize their Gmail or their Google account to create other accounts. And so it makes a lot of sense to me that they would just have a digital wallet associated with your ID that you could hold digital assets in, whether that would be stable coins or, whatever else, NFTs, anything, to be able to participate in stuff. And I think 2025 is when we see global adoption for custody of digital assets by banks and FIs. You can invest your 401k in Bitcoin through the ETF. You can gain exposure that way. You can't own BTC itself. Just through the spot ETF would be the only way that you could really gain exposure currently for your 401k. And you can borrow against that. I don't think you can borrow in your 401k, but you can borrow against the other assets that you hold there at reasonable interest rates, prime +1 most of the time. SAC says, is there a future? There's definitely a future. Will we have the option to invest the XRP ledger itself? You're buying XRP. That's like kind of your way of investing in the protocol, because the value is in the protocol, not in the asset. The asset just moves the value on the protocol. So to invest in the protocol, you would buy the asset that it leverages and was native to it. That would be the way I think about that. The people that created the protocol, OpenCoin, gifted 80% of the XRP to Ripple Labs, but Ripple continues to develop solutions on top of the network, not the network itself. So, let's see. A lot of interaction here in the chat. Appreciate you guys. I have made it to the bottom. I'm impressed with myself, and I probably missed some people, so I apologize if I did. If you do want to comment your question again, if I missed you, I will try to knock those out here in the last 7 minutes. But I did make it to the bottom of the chat. So again, if I missed you, just comment copy paste your question again down there, and I'll run it down. Jason Grove said, could I file my own LLC, then get in touch with your group? Yeah, you definitely can. I was telling Nickel this, and really anybody that I've worked in business with, I always try to provide all three options for people. So do it yourself. I'd like to educate people and provide them all the things that they need to be able to do whatever it is on their own. Done with you, which is, a service that we provide, kind of in the mastermind, answer some questions, make sure that you have all the information, kind of hold your hand on stuff, and then done for you. Right. And everybody needs different levels of help and has different resources to be able to pay or be, so I like to do all three. You're definitely welcome to file your own LLC. You can do that with Secretary of State in Wyoming. You can get a registered agent in order to be able to put the address on there. You get a virtual office if you want to, that'll forward your mail. One of the other things that we provide within the scope of our service is we show you how to set up a bank account with Mercury in a video and how to answer the questions. That's been a continual problem that people have had, is getting a bank account set up for their digital assets and taking profits. You'll want an operating agreement. You can download one offline. It's not going to be specific to digital assets, but again, we provide that. We drafted that with our attorney. If you had an attorney drafted, it cost you somewhere between $1,500 and $2,000 just for the operating agreement. And again, at the back of that, there's going to be a page that's capital contributions. You'll just write the wallet address that you're moving in there, the asset, XRP, XLM, Algo, whatever it is, the amount of the asset, and then the dollar amount that it currently is on the day that you transferred it, and you'll get that notarized. That's really what you need. It's not super complicated, but again, everybody has a different amount of help that they want. So, yeah, absolutely, you can work with our firm after. But again, if we didn't set up the LLC, we're not going to send you the reminders. We're not going to do all the maintenance and stuff on it with you. That'll be your prerogative. Ethan says, do you have any fresh insights about XRP without getting in trouble? Ethan, I don't know any more than you do. The way I say this is, I get to talk, like I'm on the campground and I get to talk to the Indians that come out of the teepee every once in a while that really do know what's going on, but they don't really tell me much because they have NDAs in place. It's not anything that I know that you don't. I obviously have a tremendous amount of confidence in XRP and its adoption and its use long term. Just again, because of the conversations I've had with people, but it's nothing outside the scope of what's publicly available at this point. Shane, we do have personal data deletion. If that's something you're interested in, we have some unique services that we can provide our clients, depending on what they're looking for. All the things that you could think of: private security, access to databases and other things, the capability to make them disappear. And we work with some of the best professionals in the world to accomplish those things. So, yeah, happy to. It's not cheap. I'll say that. The people that we work with are well compensated, again, because they are some of the best in the U.S. You guys did a good job commenting the questions here, so I'll try to run through them, make sure I get to them all. Let's see. AMM, parking, pooling, liquidity. Isn't it just a decentralized Nostro Vostro? Not really. So Nostro Vostro would require, like each bank would have to put up that liquidity for the account. In this circumstance, they don't have to put up the liquidity, somebody else does. And they are compensated for doing that. Whereas the banks, it's kind of illiquid capital, like it's just stuck there. They can't do other things with it because they have to utilize it to settle. So in a roundabout way, yeah, I can see where you're headed with that, but it solves a lot of the problems that currently exist with Nostro Vostro, but still has a better outcome. Let's see here. Tank says, do you agree with Patrick Riley, who says two-digit XRP this year and 3 digits next year? Do you see the stablecoin being released? When do I see the stablecoin being released? I see less than all-time high XRP if the constraints remain the same and we get a bull run that's speculative, or 3 digits or greater if we see adoption. I don't see anything in between there. That's just my personal opinion. And obviously both of those have different, outcomes based on different things happening. But yeah, I don't see, there's very little circumstance where XRP is 2 digits. It's either 3 digits plus or doesn't even get to all-time high, which I know is kind of disheartening. what's more valuable, XRP or the XRP ledger? The value's in the protocol, right? So like the email protocol is what provides the value for society. Same thing with the XRP ledger, to be able to send transactions in seconds for, pennies to send $1 million. The value's in the protocol. But for an investment thesis, to be able to have the tangible value for that XRP itself is what's going to be moving all of that. So again, if you were investing in the protocol, you would buy the asset that was native to the network, which would be XRP. Everturn says, "Evening, Jake. I was wondering how to determine which of your assets you would liquidate when time comes to cash in. Those that you have held for longer than 12 months and those for less for taxes." Yeah, anything that's over 12 months, you're going to have long-term capital gains, and it's going to be easier to offset or mitigate those tax implications, especially if it's larger amounts that you're able to purchase different things with or make donations with, like the other gentleman talked about in the charitable remainder trust. I would just get that figured out now, kind of have a decision of what assets you're going to liquidate, when, how much, and really I would work backwards. I would work from, okay, what am I going to invest this in that's going to offset or mitigate my tax implications? How much do I need? How much am I going to finance? Do I have the capability to finance this myself? Do I need to find somebody else that's already had this type of loan before? So that's going to be something you're going to run into with a multifamily property in particular. If you've never had a $7 million, $10 million loan, you're probably going to have to partner with somebody that has. And obviously you can come with the capital and then they can sign off on the note, manage the property. And then you're going to run that deal for 3 to 5 years, milk the depreciation on it, and then sell out and roll it into a 1031. You'll get your capital back and purchase another property. And at that point, you would have been on the note, as long as you orchestrated it correctly and probably have the credit history to be able to finance another property yourself without that other individual. So just things to consider on that side. But yeah, I would know where I was going to put my cash when I was going to cash out, and then work back from there to be able to make sure I could mitigate tax implications and figure out what points I was going to cash out whatever assets at. Fozzie Bear says, would you recommend Mercury for non-US LLCs? If no, what would be the best option? Interesting question. I hadn't asked, and nobody's asked me about international bank accounts. I would look at HSBC if you have the capability to partner with them. They utilize Medico for their infrastructure, and I think that they're going to be a huge player when it comes to custody of digital assets and also their stablecoin and everything else. So for you being in your part of the world over there in Australia, they're big in Singapore and the Southeast Asia region. I know that's something that you've been looking at. I would probably look at HSBC. We've got, here's one. Dill says, "Hi, Jake. For someone with lower end 5 digits XRP amount, in your opinion, would an LLC be beneficial before or after price appreciation?" My threshold, if you're going to take profits, it's never wrong to set up an LLC. But again, depending on how much the LLC would cost, if you're going to work with us, it's $1,000. You could put that $1,000 in XRP today and have another 2,000 XRP or close, right? If you're not going to be north of, the 13 million, you don't think you're going to be north of the 13 million, I would probably just keep buying the XRP and then move it into an LLC or estate later. Just my personal thought. Our business is obviously trying to help people, and we help people set up LLCs and obviously make money doing that. But if you don't need it, don't get it. If it's on the lower end 5 digits, I wouldn't set up an LLC yet, especially if you plan to hold long term. I would just wait. Let's see here. Mighty Tone says, if MasterCard can do 30,000 transactions per second, why can't XRP use the same or similar tech? They do that through the banking partnerships that they have, so it's not on blockchain. It's completely separate. It's like a Web 2 versus Web 3 native version of that. I mean, they could batch payments, and that's kind of what I'm talking about. So they could get there, but again, there's going to have to be some other component to the network. Side chains, they could utilize that to scale to that. But anyway, yeah, so MasterCard has spent, decades, 50, 60 years setting up the infrastructure that they have with the incumbent banks to be able to facilitate that level of transactions. XRP utilizes a network that's distributed across those people, where there would be running nodes. It doesn't have, it's like peanut butter and jelly. Those are completely two separate things, and they're not compatible with one another. So I don't know, like, how to answer your question without saying this. It's not possible. Absolutely, Fozzie Bear. Appreciate you, brother. Thank you for being part of the mastermind and all the support. Hopefully it's a good day over there in Australia on a Tuesday for you. Last question. We've got Saksh here says, do you think there will be ISO 2022 version for other industries? Yeah, absolutely. That's just kind of a designation that they give for standards when there's a protocol or standard for whatever it is in industries. So similar to how ISO is for financial institutions, but instead one for the medical healthcare industry or big tech companies. They need one for health companies. I think that, and they have some stuff in place right now, but in order for there to be interoperability and sharing of information between the different hospitals, somebody's going to have to come up with a standard for the way that they collect the information and store it and be able to share it at scale. I think Hedera is probably one of the major players in that area, just because of the security of that network and its compatibility with the standards that are required for, I think it's HIPAA. But yeah, I would agree. There's going to be, for trade finance, Andre Casterman, he was talking about the ISO standard that he created for sharing of information across bill of lading and the other documents required to ship things globally. So yeah, you'll need to standardize messaging in order to be able to facilitate value transfer and instant settlement in any application. All right, made it to the bottom here. So we are going to wrap it up for tonight. Thank you, everybody that asked all the wonderful questions. Hopefully this was valuable for you. As always, if, again, like, subscribe if it's in your wheelhouse and it's provided you some value. Looks like my TV's telling me it's time to go to bed. So with that, again, if you want to reach out, you can reach out to the firm at digitalfamilyoffice.io. And then also, if you want to join the mastermind, see what we have going on there, check out the private investments that we run. It is mastermind.beyondbroke.com. So I hope you all have a wonderful week. We'll see you guys again Wednesday night. And until then, God bless, and we'll see you on the next one.